Hi, I'm Mary Kopczynski, the CEO of RegAlytics. Welcome to this week's regulatory updates. That's right, it's 5 p.m. I haven't showered, never got to put on like normal work clothes, no makeup, haven't even brushed my teeth today, but I've been on the phone since 9 a.m. But that doesn't stop me from giving an entire update on this week's regulatory alerts because I have the greatest tool in the world that makes it really easy for me to do this. The regulator of the week is FINCEN, and don't you forget that there was an Easter egg that we got in December through the National Defense Spending Act, and it is going to overhaul, in addition to AML KYC rules under the AMLA, there is an entire section on corporate transparency. FINRA has provided an advance notice of proposed rulemaking to get public comment on the part where they're going to be looking at reporting requirements for beneficial owners. The topic of the week is student loans, which has been constantly a creeping topic going on, but this week in particular, 25 AGs of different states all urged in a letter to the Department of Education for them to cancel federal student loans for anybody who went to ITT Technical Institute, because this now defunct for-profit school lured students in with these deceptive claims about the value of this degree and how it was going to get them really higher paying jobs. So now that they've been busted, all of those people who had loans through the federal government, hopefully they're going to get canceled. In Compliance Corner this week, CFPB has provided protections for borrowers under RESPA. Anyone and everyone is talking about climate risk. So if you missed the mark on this, get on it right now, because climate risk and ESG, it's explosive. The Federal Stability Oversight Council, where the Treasury is a part of it, had a meeting, and Janet Yellen made a statement that they are now really seriously looking into hedge fund activities. So watch out there, because I wouldn't be surprised if under this new administration we have a reconsideration about what is considered a systemically important financial institution and new rules coming down to control that. This week, Biden signed the PPP Extension Act, giving a little bit more time for applications to get processed. Also in Treasury this week, the Deputy Secretary had a meeting with thought leaders about the U.S. economic and financial sanctions policy and whether or not the entire strategy should be overhauled. So that's another thing to watch out for. The SEC talked quite a bit about SPACs this week, which are special purpose acquisition companies. This week, the SEC put out formal staff guidance on how they think things need to be addressed in terms of accounting, financial reporting, and governance. Also in innovative products, the Office of the Comptroller of the Currency put out a statement about commercial lending and tax equity financing transactions. And finally, on the OCC, they did put out company-run annual stress testing reporting requirements this week. So now if you're an RRP, you know what the parameters are. In the techie space, the major agencies, including the FDIC, Federal Reserve, OCC, CFPB, and the National Credit Union Administration, are seeking now views from financial institutions about how they are using artificial intelligence. And at the state level, West Virginia has now issued new rules around their regulatory sandbox. In our Fine Tracker this week, the Independent Financial Group got busted by the Texas State Securities Board for not having specific training requirements regarding non-traditional ETFs. And they also didn't really have a supervisory system in place to monitor and flag for the various holding periods. And so they got reprimanded, and they have to pay a refund of $276,000 to customers, as well as an administrative fine of $75,000 to Texas. And for those of you following diversity and inclusion, I am pleased to report that for the first time ever, the Boston Fed has a majority of female board of directors. In terms of bills going across the country this week, there's a ton of things going on having to do with gender definitions and identities and new birth certificates if you have a surgery. Also, very much some abortion bills that are more limiting of it. We are also seeing, of course, rollouts of federal funding going out for all sorts of broadband expansions, healthcare improvements, etc. But one topic rolling around in a number of states, including Arizona, is about vaccine passports and whether or not those are appropriate or a complete violation of privacy. For those of you following SROs, NACHA, which is the National Automated Clearinghouse Association, released its top 50 rankings of financial institution originators and receivers of ACH payments for 2020. And the volume was almost 23 billion last year in payments, which is an 8% increase over 2019. In state compliance news, the Connecticut Insurance Department has adopted the most recent version of the National Association of Insurance Commissioners model regulation on suitability for annuities. The Colorado Department of Regulatory Agencies announced today that they've sort of combined a couple different agencies to create a joint financial engagement unit that is supposed to be collaborating with local and national agencies focused on consumer protection, equity, and access to capital. And then there's a couple fun ones. Last week, I talked about the ghost gun bill that a lot of states are trying to close, but did you hear about the ghost cows? A Washington man pled guilty to a $244 million scam having to do with cattle that didn't actually exist. And for those of you following the states, I will say Wisconsin is on a tear this week with all sorts of new bills proposed, including discriminatory hairstyles, transportation rules. But my favorite one is they're really trying to make it legal to sell alcohol on racetrack grounds. I mean, as long as you're not the one driving, why not be drinking?